The Reserve Bank of India has cut its growth forecast and raised its inflation outlook for the current financial year, citing higher crude oil prices, global supply disruptions, and concerns over a weak monsoon. The RBI has lowered its GDP growth projection for 2026 to 27 to 6.6%, down from the 6.9% forecast made earlier. At the same time, it has raised its inflation estimate to 5.1%, up by 50 basis points from the previous projection, signaling growing concerns over rising prices. Despite these risks, the Monetary Policy Committee unanimously voted to keep the repo rate unchanged at 5.25% and retained its neutral policy stance.
Taking all these factors into consideration, real GDP growth for this year is now projected at 6.6%. We had earlier projected 6.9%, of course, with huge uncertainty and downside risks. With Q1 now projected at 6.6%, Q2 at 6.3%, Q3 at 6.5%, and Q4 at 6.8%. Prolonged global supply chain disruptions, volatility in global financial markets, and weather-related shocks continue to pose downside risks to the domestic growth outlook. Considering all these factors, CPI inflation for this year now is projected to be at 5.1%, about 50 basis points more than earlier projected, with Q1 at 4.2%, Q2 at 5.1%, Q3 at 5.9%, and Q4 at 5.4%. Core inflation is projected at 4.7% for this year.
RBI Governor Sanjay Malhotra said the economy has so far remained resilient, but the impact of rising energy costs is beginning to show. The governor warned that rising prices for petrol and diesel and costlier industrial raw materials could add to inflationary pressures. The RBI also warned that a forecast of below normal monsoon rainfall and the possibility of El Niño conditions could affect agricultural production, food prices, and rural demand.
The committee noted that the global environment has deteriorated since the last policy meeting in April.
On growth, the RBI said elevated energy prices and supply chain disruptions linked to global conflicts are weighing on economic activity. While manufacturing, services, and domestic demand remain relatively strong, high-frequency indicators are showing early signs of moderation in some sectors. The central bank said the outlook for both growth and inflation remains highly uncertain and will depend on the duration of global conflicts, the restoration of supply chains, and the performance of the monsoon.